Jimmy.
Now what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this Becky quick. While the average man looking at this sad life. She fine as it. I'm over here looking at tails and whips like 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dropped, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, roll with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits.
That TTG money gang,
making profits.
We some snipers.
Hey yo, what's up everybody? What's going on, folks? Welcome to the TTG live stream. Record close on the Dow, record close on the S&P, all right ahead of jobs data. Jobs data this week starts tomorrow. Jerome Powell spoke today. Markets at first didn't like what he said, then they loved what he said. Markets dipped midday, rallied into the close right ahead of the jobs data that we've got cooking. And then you've also got the port strike that looms beginning tomorrow. We're going to have 36 ports along the East Coast and the Gulf of Mexico that are going to be impacted and affected by that strike at the ports. And you got all the jobs data. So needless to say, it's going to be a very volatile week. I can't wait to break down my game plan with you guys on exactly how we're going to make money throughout this entire week. Welcome. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group. In case you didn't know, we were a Benzinga FinTech Awards finalist last year for Best Data Analysis Tool, up for another award this year, coming for that first place prize. But we're also the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, individual mentorship and coaching for stocks, options, crypto, and futures. We day trade, we swing trade. We also cover long-term investing. We do scalping. There's literally something for everybody here at True Trading Group. Now, if you're wondering why it is you should listen to anything it is that I discuss on this channel, it's not because I think I'm the world's greatest trader. It's because I did not figure this stuff out on my own. I began my trading career working at T3 Alpha Funds, my first job in New York City right out of college, where they had me go through an educational training program before they ever let me touch $1 of the fund's money. Then 2008 happened. That was the Great Recession. the big stock market crash, but it also was the same year that I received one of the firm's Trader of the Year awards. Now you fast forward, I'm the co-founder and the head trader at True Trading Group, and along with my team of 8 other professional full-time trading mods and over 30-person staff, we've helped thousands of members from all over the world to reach their goals. So we have members in 117 different countries, over 10,000 members in 117 countries. Truly a global community here at True Trading Group. People from all walks of life, people from all experience levels, doctors, lawyers, IT professionals, barbers, masseuses, auto mechanics, military, college. We've got every walk in every profession and everybody that you guys can possibly imagine. Then we have professional traders. We have former market makers that used to be market makers for the NASDAQ as a member. We have our own moderator, Gio, who's a former market maker with 30 years of Wall Street experience. And we have everything in between. People that never traded a day in their life versus people that never traded a day in their life versus, sorry, I'm just reading a message that somebody had just sent me. That's very nice. And everything in between, guys, right? So that is really the difference maker here within True Trading Group, is that no matter if you guys are just complete newbies and total beginners and you're looking to get yourself started, or if you're a seasoned professional and you guys are looking to take your trading to the next level, you're an experienced trader, there's something here for everybody at True Trading Group. All right. So if you guys are ready to learn trading profit for real, you've come to the right place. See, we go live on this YouTube channel several times a week. So make sure you guys subscribe to the channel, smash that like button, turn on notifications, make sure you never miss out on any of these live streams, because we're dropping golden nuggets on a regular basis. I gave you guys some beautiful trade ideas just last night on this live stream that ended up working out very, very well today. A lot of our members had some really great days today. See, every Sunday evening, I come on this YouTube channel and I give you guys trade ideas for the week. Right? I give you guys trade ideas for the week. I tell you, this is what I think is going to happen. These are the levels. These are the prices of stocks I'm going to be looking to get in at. And we had some really great trades today on Netflix and Amazon. Some members had some really great action there off of the analysis that we gave you guys in the live stream yesterday. So I don't just come on these live streams and I just tell you, hey, this is what happened today. I'm not a Monday morning quarterback. I come on here and I put my neck on the line. I tell you exactly what I think is going to happen this week, tomorrow, which stocks I'm in, which stocks I'm looking to get into, what are the prices, and exactly what I think. And you guys can all look back and point. Everything's on this YouTube channel. And you guys can go back, look, and point and say, okay, Mike was right about this. Mike was wrong about that. Mike's great. Mike sucks. Whatever you want to say, be my guest, right? But I put it all out there and I have no problem telling you guys exactly what my thoughts are. The moderators and I collectively, you guys are going to want to pay attention to the things that we talk about on this channel and the things that I say specifically, the things that the moderators in True Trading Group have to offer, because the mods and I collectively as a group are able to maintain a cumulative win rate on all of our executions of just around 80%, now going on roughly the last 5 years. We track every single buy, sell, green trade, red trade, stop out, break even, you name it. Every execution is tracked. And the moderators and I collectively as a group are able to maintain a cumulative win rate of over 80% on those over the last 5 years. So fully transparent at True Trading Group. We upload all of our trading records from the brokerage accounts onto the TC website for everybody to be able to see. Right? Fully transparent, open book here, guys, at True Trading Group. All right. So welcome. Again, make sure you guys smash that like button, subscribe to the channel. Big day. Big day today. We got a big rally into the close, but it's not really necessarily a big day, but it's a big week. It's a big week because we have jobs data that's coming out. Okay. We got jobs data coming out. And if you guys remember, last month, we saw the unemployment rate actually go down. So the unemployment rate was 4.3 for July. It was 4.2 for the month of August. We're going to find out what it is now for the month of September. And this is going to be, I think, really the chance to solidify soft landing. Because now that the Fed has started cutting interest rates, the focus is shifting from inflation to the economy and to the jobs market. Jerome Powell spoke today at a conference or at an economic forum, and he actually reiterated that the economy is stable, the economy is still solid. And he also said that the labor market, although it's cooling, it is still stable and it is still solid. And it is. I mean, honestly, at 4.2% unemployment, that's not a bad number. Okay, it's not 3.4, which is where we were, but it's also well below the 20-year average. The 20-year average unemployment rate is around 5%. So we're still well below the 20-year average. 4.2 is still a low number. Now, if you see that number start to climb to like 4.4, 4.5, 4.7, then I think that we'd be in for a little bit more of a rougher landing, a little bit more of a deeper pullback. The soft landing would come into jeopardy. But so far, that's not what we see. And I got to be honest with you, I don't think you're going to see that going into these next couple of months, because if the labor market hasn't really broken down by now, you're going to be rolling into the holiday season. And the holiday season, you get a lot of these part-time hires. I think it was UPS, that said that they're hiring over 100,000 people for the holidays. So you're going to get all those seasonal hires going into the holidays. And that should also help kind of strengthen the job numbers. Before we go into next year, because everybody asks me, I always publish my outlook. I always publish a long, detailed, thorough analysis and outlook report for the new year. I do it every year for members of True Trading Group. We've actually outperformed the S&P 500 every year since I've started issuing that report to our members. I go over what I think the market's going to do. I go over which sectors I think are going to perform best, the sectors I think are going to perform worst, and then what stocks I am buying for and that I'm positioning myself for in the long-term portfolio for that year. I also go through what commodities I think are going to be hot. We've been spot on with that these last couple of years. We'll see if we can continue that pace, but we've outperformed the S&P 500 every year since we began issuing those. So obviously, needless to say, a lot of our members get very excited for that report that comes out either the last week of December or the first week of January. And before I'm willing to make a stance and make a call on what I think happens to the markets next year, I really want to see what the job market looks like throughout the holidays, because what I want to see is if the jobs numbers improve during the holidays, that's going to be a sign to me that soft landing is achieved. But if the job numbers just remain sideways throughout the holidays, then that tells me that the real foundation of the jobs market is actually weakening and the numbers are just staying stable as part-time hires cancel out job losses. But then after the holiday, the reason why that's a problem is because after the holidays, those part-time holiday hires drop off. And typically when companies want to do layoffs, they don't do layoffs in November and December because they're not cruel. They do layoffs in January and February after the holidays. Okay. So usually in January and February, you see if the labor market is weakening, that's when you'll see that weakness happen. But that's why it's very important for me to see the job numbers in November and December actually improve, not just remain stable. And that will be a sign to me of the health of the actual labor market. So that's what I'm going to be looking for as we roll into the end of the year, before I make a call on whether or not I'm convinced soft landing or if there's still that possibility of a little bit of a shake up there next year. But as it stands right now, as it stands here today, the markets are at all-time highs. Record close on the S&P, record close on the Dow. We didn't quite make an intraday record, but we made an all-time record close right before you get job openings numbers tomorrow. So the market right now believes that there is soft landing, and the markets have priced in soft landing as the most probable scenario, and rightfully so. You're nowhere near a recession. GDP numbers for the last quarter came in at 3%. That is nowhere near a recession. That's not even a soft landing. 3% is no landing at all. 3% is actually solid GDP. So when you take a look at the GDP numbers, you take a look at a 4.2% unemployment rate, everything still points towards further upside. But here's the thing that people need to start paying attention to. It starts tomorrow. That's the strike at the ports. The last time that we had a significant strike for the longshoremen was 2002. It lasted 6 months. I really hope that this strike does not last 6 months, because if it lasts 6 months, you will see an inflationary impact on the price of goods in the United States. And the timing of that couldn't be any worse, because the Fed just started cutting rates. And they just started cutting rates. You're already seeing mortgage activity begin to pick up as mortgage rates have fallen from 7 to underneath 6. So you're going to see with rate cuts, and more are coming. you're not going to get rate cuts in October because there's no Fed meeting, but you're going to get rate cuts in November. And then you're going to get rate cuts in December. And then you're going to get rate cuts in 2025. The Fed has started cutting rates, and they're going to continue cutting rates. That is going to boost economic activity. You also have China. China just announced trillions of dollars of stimulus to stimulate their economy. That potentially could be inflationary around the global economy. And here in the United States, we have seen inflation over the last couple of years coming out of COVID without a strong Chinese economy. China's economy has actually been a complete dumpster fire. It's been a disaster. China's been in a recession. China came out of, you actually had an unemployment rate, a youth unemployment rate in China was just under like 30%. I mean, it was brutal. It was terrible coming out of COVID, but they didn't have the trillions of dollars of stimulus that the United States had and that a lot of other countries around the world had. They just did it the other day. They just did it last week. That's why all your Chinese stocks have gone absolutely bonkers. They've gone absolutely crazy is because of that stimulus. Baba was $84. It went to 114. It's now 106. Big pullback today. Pinduoduo was 100. Now it's 135. JD was 27. Now it's 40. Yeah, you heard that correctly. Last week it was 27. Now it's 40. And David Tepper, Appaloosa Management, hedge fund manager. He came out last week when China announced all this stimulus and said, it was actually a week and a half ago, and said, buy everything, all things China, because this stimulus is a huge boost to the Chinese economy. Now, I'm not saying that any one of these situations in and of itself would be a problem, but all three of these things happening at the same time could end up pushing inflation back up. China's economy seeing trillions of dollars of stimulus to stimulate their consumer, to stimulate their economy is going to increase demand. That could also help increase the cost of commodities, metals, right? Oil. You can see demand increase for those things as China's economy demand increases. The Federal Reserve cutting interest rates is going to spark demand in the United States and also around the globe. And then the ports being closed. The longshoremen going on strike, impacting 36 ports along the eastern coast and the Gulf of Mexico, is going to see transportation costs for goods increase. It's going to cost more money to ship goods from overseas. The shipping routes are going to be extended and be much longer. Instead of going into the Gulf of Mexico or going into the East Coast, you're going to see rerouting of shipments to maybe the port of LA, okay, and rerouted to the West Coast, because the West Coast ports are not affected and not impacted by the strike. It's just the East Coast and the Gulf of Mexico. So you're going to see a lot of reroutes over to the West Coast. That means longer travel times, longer transportation time, which means the burning of more fuel, longer need for insurance of those products on those shipping vessels. It's going to mean higher costs for shipping containers. Everything is all the costs of all these goods are going to increase. Things like chocolate and alcohol and different food products are going to increase. 30% of all bananas, okay, come from overseas. You're going to see the cost of bananas go higher, the cost of chocolate, the cost of all these different things. You're going to start to see the cost of these things move higher. So that is inflationary. That's why you want to see the strike is ended quickly, because the longer that goes on, the more it has an impact on the cost of goods. And what we've seen with inflation over the last 2 years is that goods inflation actually came down very rapidly. The sticky inflation was services, okay? And the reason why services inflation was sticky was because our consumer remained so strong. And our consumer came out of a situation where they were just focused on goods during COVID when they couldn't go anywhere. And then after COVID, they just were focused on services and experiences, and the consumer remained strong because the job market remained strong. And therefore services inflation remained sticky while goods inflation came all the way down. But this situation with the ports, if it's a prolonged strike, could see those goods numbers begin to move higher. And if you are going to couple sticky services inflation from a strong consumer and labor market, and then you're going to couple that with goods inflation beginning to pick back up, that could be a real problem for the Federal Reserve next year. And all that could be fueled behind by a Chinese economy that's coming back online with trillions of dollars of stimulus. So the potential playbook is there for a bit of an uptick in inflation and then therefore possibly a stagflation situation, which would be a worst possible scenario. Stagflation is a terrible thing. It puts the Federal Reserve between a rock and a hard place. It is not what anybody wants to see. I don't think that that's the most probable scenario. I'm just telling you, as the stars are aligning, what options are on the table, and I want you to be aware of them so you know what to look for. You know what to look for, so that if something were to happen, you're not blindsided by it and you're prepared for it. And we'll be able to benefit, and we'll talk about ways to make money if that was to be the case. I don't think that's the most probable situation at this time. I want to make myself very clear. I do believe soft landing is the most probable outcome. That's something coming from me, because if you asked me 2 years ago, I was pretty confident that we were going to have a mild recession. I was never in the doom and gloom end of the world scenario like a lot of other people were in 22 and 23. But I did think a mild recession was something we would see in 23 or 24. It never happened. You had the banking crisis, Silicon Valley, First Republic. Those banks went belly up in March of 2023. And I thought that would have been enough to kind of push us into that recession. And it never happened. It never happened. There was no systemic issue. The market continued to chug along. The economy continued to chug along. And here we are today on September 30th with an all-time record close on the Dow, an all-time record close on the S&P. The numbers don't lie. Okay. Well, technically job numbers, I guess, do, because we keep getting job revisions to the downside. Every job number that comes out gets revised to the downside the month later. So we'll have to see actually what the revisions are from last month's number, which is what we're going to get those revisions here this month. And then the number that comes out for the month of August, the numbers that come out for the month of September, which is what we're going to get this week, that's going to be on Friday. Just assume that number is lower than what it actually is. And a lot of analysts are getting to that point. A lot of analysts are getting to the point where whatever the jobs number is, a lot of analysts are just saying, you got to just assume that the number is lower than that, because you've had not one, not two, not three, but 10, 15 different job numbers have been revised to the downside. Not to mention the huge revision from 23 to 25, from 2023 to 2024 of over 800,000 jobs was revised down, which is the largest job revision since 2009 that we've had. In 2009, you were in the heart of the great financial crisis and the housing disaster and the foreclosure mess, and the market and the economy was in a massive, severe recession. So it's like, okay, I understand how you have these huge job revisions to the downside and you had a much weaker number than you thought, but not the case here this time around. So just assume that number is probably going to be somewhere to the downside. But the number that's actually would hold true, though, still, even if the number of jobs added isn't accurate, is the unemployment rate. So the unemployment rate is the number that I'm going to focus on the most, because that is a number that people would use for the possibility of recession. In order to have a recession, you would need 2 consecutive quarters of negative GDP growth with a 1% increase in unemployment. The unemployment rate was 3.4 at its low. We're at 4.2. So once you get over 4.4, you get to 4.5, then people can say, if you had negative GDP, which you're nowhere near it now, then you can start talking about recession. But we're nowhere near there. So I guess we don't have to talk about it. If I think that is something that becomes more likely, I'll certainly let you guys know. You know, I'm very outspoken on these live streams. I always tell you what I think. And as it stands right now, soft landing, I think, is the most likely scenario, but I am paying close attention to this port situation, because that could be kind of a black swan event that could have a meaningful impact on inflation going into next year. So pay attention to it. Okay? Pay attention to it. I don't think enough people are giving it credit. I think it could be a bigger problem than people might think if it's a prolonged situation, but we'll pay attention to it. We'll see what happens. Okay? So that's that. All right, let's go back on over to the charts. Let's talk about kind of what we have happening here in the SPY and in the S&P. We broke out through all-time highs following the Fed meeting, and here you guys can see this all-time high breakout. I thought that we would actually have a little bit of a pullback today, which we did, and until Jerome Powell was doing his presser. And then we reversed today's price action and then closed up there near highs. So if you guys caught my live stream yesterday, I actually drew a candle for you. The candle that I drew for you looked a little something like this. Okay, that's a candle that I drew for you guys yesterday on the live stream with the price action that I anticipated coming into the day today. Obviously, that is not how the day panned itself out. we looked like this early in the session, and then after Jerome Powell spoke, the markets reversed. And I will show you exactly what happened. You guys can see right here. So going into, we had this nice little sell-off here in the middle of the day, nice little sell-off, and then we reversed it all the way back up once Jerome Powell finished speaking. Okay. And that's what we got. Okay. And that's what we got. So not the price action that I anticipated coming into the day today, but it is what it is. This is what we have, and this is what we have to deal with. The job openings is what you're going to get tomorrow, the JOLTS numbers. So job openings tomorrow is what we're going to look for. Any real significant weakening in the jobs numbers, I think the markets are not going to like. See, I'm torn between how I want to analyze jobs data. I'm honest with you guys, because I'm not quite sure if I think the market would rather strong jobs numbers, which would insinuate soft landing, but would also mean slower rate cuts, or if the market would prefer a slightly weaker jobs market that would insinuate faster and more aggressive rate cuts. So I haven't decided yet on whether or not I think the market would take the jobs data as a glass half full or glass half empty scenario. And that's why I'm really interested to see what happens throughout this week, because this week is going to tell me how the markets view the jobs information. And that's going to give me a lot of insight into how I think the markets will react during the holiday season as we get all that jobs data and as we get retail sales data. For me, those are the two biggest pieces of information and the two biggest pieces of data that you need to focus on for the next couple of months. It's retail sales, the strength of the consumer, and it's the job market. So depending on if you get a really weak job openings number tomorrow, but the markets move higher, then that means glass half full. And the markets want the weaker number because it means that the Fed is going to be more aggressive cutting rates, and that's what the market wants. If you get a weaker than expected jobs number and the markets go down tomorrow, or job openings number and the markets go down tomorrow, and that's going to tell me that the markets would rather see strong numbers and lesser and fewer rate cuts. I think that's the more likely scenario, that the markets would rather see strong jobs, meaning slower rate cuts, because slower rate cuts doesn't mean that the Fed is going to stop cutting rates. The Fed has already started, and they're going to continue. So I don't think it's as important is the speed in which they cut as just they are cutting, and they're in a cut cycle. So I think we'd rather see the economy and the job market hold together while that cut cycle progresses, rather than see the labor market begin to weaken, which forces the Fed to cut rates more aggressively. I think that's a much more hectic scenario. And I think that would be a much more volatile scenario. And I don't think the Fed really wants to play that game. So I think it's going to be the former, which is the markets would say strong data, good, weak data, bad, but we'll see tomorrow. Tomorrow's job openings, Wednesday's ADP employment number, payrolls, how many payrolls were added onto ADP's payment processing platform. Thursday's jobless claims, which we get every week. And then Friday's the big one. That's going to be the U.S. labor report. That's going to be how many jobs were added in the month of September and what is the new unemployment rate. So I think this week, even if you don't trade this week at all, which I think you'd be crazy if you didn't, because I think there's going to be tons of money-making opportunities. But I think that this information this week is going to really set the tone, and it's going to give you foresight into how the markets will react for the next couple of months as we go into the fourth quarter and we finish out the end of the year. Because I do think that a Santa Claus rally is on the table, where you might get, a little bit of volatility around the election, and then post-election, if the jobs data holds up and the retail sales numbers are strong and soft landing seems all but confirmed, I think you can see a market rally into the end of the year. I don't think you would rally from here. I think you would have a pullback and a volatile moment prior to that rally happening. I think you might get another pullback into like maybe the mid 550s or low 550s, and then post-election rally and then post-election soft landing rally. Doesn't matter who wins. I don't think the markets really necessarily care, but just usually it's after the election is usually when you start to see that post-election rally, once the unknown is no more, and the markets can say, okay, we know who the president is, we know who controls the House, we know who controls the Senate, and then the markets can then do their thing. The markets don't necessarily care about a Democrat or Republican president. If you look back over history, it's actually almost dead even neck and neck between market performance under a Democrat or Republican president. It really doesn't matter. The market cares a lot more who controls Congress, who controls the House, and who controls the Senate is really what they care about. Because it doesn't matter who the president is. If you have gridlock in Congress, you're not going to be able to pass any of the crazy things that either party would want to pass. So it kind of keeps everybody in check, keeps policies from extreme, and that's what the market likes. When you have a clean sweep, when it's blue, 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 or red, 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 that's when the markets don't necessarily like that, because that means extreme policies have a higher potential of being passed, and that's what the market doesn't like. The market likes that neutrality. It's called gridlock, which is when you have one party controls the House, another party controls the Senate, and that's where things could kind of stay a little bit more towards the middle, and that's what the market likes. So I think if that happens, you can see that Santa Claus rally going into the end of the year. But this week, I think you're going to get a lot of volatility. I think it's the perfect opportunity for us to really step in there and start to kick some ass. We had a wonderful Q3. This is the last trading day of Q3. Tomorrow starts Q4, and we finished it out with a bang. We actually had a situation, zero DT. I don't know if you guys trade zero DT options. Well, two of our moderators that trade zero DT options, one had a 320% gain today. Another had a 200% gain today. A 200% gain and a 320% gain literally today. It's Monday. So you want to talk about finishing out the month of September with a bang? It doesn't get much more bang than 200 and 320%. So congratulations to all of our members. And that's not just like an isolated incident, right? That's not an isolated occurrence. This is what's happening on a weekly basis inside your trading group. The reality is members are making money. Members are becoming better traders. And that is all that matters. It doesn't matter how much money that I make, because not $1 of what I make is going to go towards paying your bills. What matters is how much you make. And if you are able to take what you learn in True Trading Group, take the trade alerts and the trades that the moderators of True Trading Group make that you follow, and if you are able to actually make money from it, that's what matters. That's why you're here. You're not here to make friends, although we do make friends in True Trading Group. We say welcome to the family because we generally give a shit about each other's success. You're not here because you're a Yankee fan like I am. I can't wait for the ALDS. I'm going to game one. Ayo, what's up? You're here to make money. And that's what True Trading Group members are doing. Now, don't take my word for it just because I say it to be true. Just because I say it doesn't make it true. Let's ask the members themselves. Guys, go ahead. Members of True Trading Group, do me a favor. If you are a member of TTG, go ahead, type the number 1 if you are making money and you are becoming a better trader because of True Trading Group. Just go ahead and type the number 1. Type the number 1 if you are making money and you are becoming a better trader. Type the number 1 inside of chat right now. Anybody that's on this YouTube stream, if you are not a member, you should pay attention to how many people that you see right here typing the number 1. Because all of these people, these are your friends, your family members, your coworkers. If they can do this, so can you. 82% of our members have a full-time job. So it's not like all these people have all the time in the world and they're sitting in front of their computer screens, right? And they're staring at charts. No. 82% of our members have a full-time job. If they can do this, so can you. The biggest misconception that people have is that you need to be in front of a computer to do this, and you need to have tens of thousands of dollars to do this. Wrong and wrong. Some of our members started with just $100 in their trading account. I'm not exaggerating. Members of True Trading Group, can you guys just do me a favor? Actually, real quick. Members, if you started True Trading Group when you joined, if you had less than $1,000 in your trading account, can you comment in chat right now and tell me what you started with? I really want to prove the point. I want people to really understand what's possible and stop limiting themselves, because that's what a lot of people do. A lot of people say, oh, I don't have the money. I don't have the time. Yes, you do. You have a couple $100? Yes, I'm sure you do. Otherwise, you wouldn't be on a YouTube channel that talks about the stock market if you didn't have a couple $100. And I don't need 40 hours a week. Just give me a couple. Can you give me a couple hours a week? Because if you can, that's all you need. Hummar had started with $100, Sweet $500, Mojo $700. These are people that started with less than $1,000 in their account. Sam says anyone can do this. Listen to Sam. Sam is a very smart guy. You guys can do this. I had the money, but didn't have the education. Education is needed. Amen. Cody Hill, very well said, man. Very well said. I tell people all the time, I would much rather have a $500 account with an education than a $50,000 account and no education. Because I don't care if you have $1 million in your trading account. If you don't know what you're doing, you're going to lose it all just the same. What I actually have seen with our own members actually is one of the members that actually have the most success are members with smaller accounts that start with smaller accounts, because the members with smaller accounts protect their capital because they got to make it last. When someone joins and they've got a $100,000 account, they're very lackadaisical. They take big shots, they take big risks, they try to hit home runs, they try to double up their account real fast, and then their 100K drops to 80K, and they're like, oh, well, whatever, it's not that big a deal, I still have 80K. And they still think, oh, that's still a good amount of money. But you just lost $20,000. The person with a $500 account, really protects and controls their risk and is very, very disciplined. So it's actually, I see, me personally with members, I see people with large accounts, they tend to blow their accounts up at a much higher rate than people with small accounts. And it's because of how much they control their risk. I'm a huge stickler for risk management. Okay. You want to quote from me, take this quote and let it stick with you for the rest of your life. Successful traders are more concerned with how much they're going to lose if they're wrong. Struggling traders are more concerned with how much they're going to make if they're right. I'll say that one more time. Struggling traders are more concerned with how much they're going to make if they're right. Successful traders are more concerned with how much they're going to lose if they're wrong. Please heed that advice. I don't care how good you are as a trader. If you do not control your risk, you're going to blow yourself up. I don't care if you have $1 million or $100. You will blow yourself up. Just ask Melvin Capital, $1 billion hedge fund that did not control their risk, kept shorting GameStop, kept shorting, never covered, blew themselves up, lost everything. Now you might say, well, $1 billion, that must be enough, right? You can't blow up your account with $1 billion. Wrong. 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 It's not about how much money you have. You got to control your risk no matter if you've got $100 or $1 billion. You still have to learn how to control your risk. Losing is part of trading. You're not going to be right on every trade you make. I make red trades. I have red days. I'm a human being. I'm right a hell of a lot more than I'm wrong, right? But you have to, when you are wrong, you have to embrace it. You've got to accept it. It's okay to be wrong. It's not okay to stay wrong. At True Trading Group, we don't just teach you how to find winning trades. We teach you how to lose properly, because there is a right way and a wrong way to lose money when you're trading. Trading is like football, right? Nobody in the NFL likes to get hit, right? So, oh yes, I just got my clock cleaned going across the middle and now I have a concussion. Nobody likes that. But you know damn well when you sign up to play football that you are going to get hit because it's part of the game. It's part of football, right? Everybody wants to score the touchdown, but you're going to get hit in order for you to get to the touchdown. Trading is like that. Everybody wants to make money, and that's the goal. And I get that. Obviously, that's what we're here to do. That's what members are here doing. You saw when I asked before who's making money. Obviously, I enjoy making money. So do our professional traders that are moderators, and so do our over 10,000 members from 117 different countries. We all are here to make money. You want to make money. I get that. But in order for you to make money as a trader, you're going to have to learn how to lose properly. Every time you're wrong on a trade, you can't blow yourself up. You can't lose more on one losing trade than you make on 3 winning trades. You're never going to be consistently profitable that way. You've got to make more money when you're right than you lose when you are wrong. Period. That's it. Most people that are on this live stream that are not yet profitable have a win rate over 50%. but you're still not making money. Why? The only answer is your losing trades are larger than your winning trades, which is why even with a greater than 50% win rate, you are break even, or you're negative, you're losing money. If you have a win rate over 50%, if you control your risk and you make more when you're right than you lose when you're wrong, you are consistently profitable. The end. Let the math. That's what trading is about. That's what I'm going to teach you guys. Trading is not about predicting the future. It's about identifying high probability setups and putting yourself on the right side of that probability and controlling your risk. That's what I'm going to teach you. I'm not going to teach you how to predict the future. I don't know what the future holds. I don't know what price Tesla is going to close at on November 7th, of 2024. I don't know the answer to that question. I'm sorry if that you expect me to know the answer to that. I don't. But what I do know is what a chart setup that looks like a stock has 20% upside from here over the next week. I do know what that looks like. And I'm going to put myself in that position every single time over and over and over again, because that's what's worked over the last 18 years of my career. That's what you're going to learn as a member of True Trading Group. So for those of you that are here with me now on this live that are not yet members of TTG, do yourself a favor, go to ttgoffer.com right now. Go to ttgoffer.com. Every single thing that you see on that page is going to be included in your annual membership. We just signed a massive deal and agreement with a very big company. I'm not sure if I'm even allowed to make this public here yet on this YouTube channel, which I'm getting told right now I'm not able to make it public yet. So I can't even make it public yet on this YouTube channel. But we just signed a very big deal with a company that you all are very well aware of, where we are going to be implementing their tools and their resources onto our TTG platform so that our members are going to be able to have access and use these tools. These tools, if you were to pay for them directly from this company, would cost you around $1,000 a year. You don't have to pay $1,000 a year to have access to these tools, and you guys join True Trading Group. See, there's a reason why we were nominated and we're a finalist for the Benzinga FinTech Awards. It's because we have brought the best trading tools in the industry all under one roof. We've negotiated deals with some of the top companies that are leaders in this industry and to have their products on our platform so our members have access to them. It saves our members literally thousands of dollars a year by not having to pay for these tools. What are some of those tools? Benzinga Pro is a real-time news feed with the Squawk Box feature. TradingView's premium charting software. The Trade Idea scanners on our platform for you guys to use. Unusual options activity, options flow, dark pool data, social sentiment scanners, short data. All of these things are included with your membership. There is no additional cost or upsell for anything that you see on ttgoffer.com. Literally just pull up the page, ttgoffer.com. Everything on that page is included for $500 for the whole year. There was no coupon code needed. Just go to ttgoffer.com, enter your info, check out, and you guys are good to go. It's going to be a huge week. Luckily for you, you're on this live stream today, and it's before the jobs data comes tomorrow. But starting tomorrow, you're going to get an increase in volatility because of this jobs data. Starting tomorrow, you're going to get an increase in volatility because of the port strike. So lucky for you, you're here today and you're not here Friday. You're not here next Monday because you would have missed a week of what I think is going to be filled with trading opportunities that I could literally make your entire month in one day. That's the type of action I think we're going to see this week with the catalyst that we have in front of us. Now, I know I talk a big game on these live streams. I do. I get it. But that's because I believe so strongly in the platform that we've created. I see the results our members have. You see the results our members have. Or maybe you don't. Maybe you don't see the results our members have. And in case you missed it, I'll show you. Pay attention. Members, one more time. If you guys are making money, type the number 1 in chat. Type the number 1 in chat if you're making money. Type the number 1 in chat if you guys are making money. Plain and simple. It's a very easy, straightforward question. Type the number 1 if you're making money. Anyone that's not a member, watch and pay attention how many people you see type the number 1. Once again, these are your friends, your family members, and your coworkers. There is no difference between them and you. If they can do this, then so can you. So all you've got to do is go to ttgoffer.com. It's $500 for the whole year. And I told you, I know I talk a big game, but I back it up with our own money and how we prove to you how much we believe in this platform's ability to help you reach your goals. We offer you a double your money back guarantee. You heard me correctly. I did not stutter. Your internet connection is fine. When you join True Trading Group, if you are unable to make back your membership fee at least one time, we give you back double your fee. The way that it works, it's right there on the checkout page, by the way. It's in black and white. Go read it. W money back guarantee is literally right there. Just go check it out. I ask you when you join, go through our courses, pass our quizzes, and attend one study group. We do study groups every Thursday. I'm asking you to attend one. That's it. One. And if you are unable to make enough winning trades to equal the $500 that you're paying to join us, we'll give you back $1,000. That's the deal. And I can offer you that because the refund rate at your trading group, it's actually less than 2%. If our refund rate was 12%, I wouldn't be able to give you double your money back. That means we'd be giving back 24% of any sales revenue that we generated as a company. And it's not possible for a company to survive doing that. And we are a business. Make no mistake about it. We have over 30 employees. We have over 10,000 customers from all over the world. You want us to treat you like a customer because you want to hold us accountable for what it is, the service that you are joining, the service you're paying for. And let me again make myself clear. You are paying for the tools, the resources, the top tools and resources in the industry that would normally cost you thousands of dollars. You don't have to pay that anymore. You get access to it when you join for just the $500. You're paying for education, a simplified version of the professional training that I received working at a fund on Wall Street. That's how I got my start in trading. And now 18 years later, here I am. You're paying for the guidance by 8 professional full-time trading moderators that are with you every day, sharing their screen, talking to you on the microphone, answering questions, telling you where their orders are, notifying you in real time when we enter and exit positions. And if you can't be in front of your computer, don't stress it. We have a mobile app that allows you to stay connected to our platform, even if you're not in front of your computer. You get real-time push notifications sent to your cell phone whenever one of our mods enters or exits a position. That's how the 82% of our members that have full-time jobs, that's how they're still able to benefit from the platform. That's how they're still able to make money. It's through that mobile app. That mobile app is free for iPhone and Android when you guys join TTG. So what the hell are you waiting for? Go to ttgoffer.com, join for the 500, get your butt in chat before tomorrow's job openings data and the volatility kicks off. If you have any questions, text us. 1-888-621-2127. The phone number is right down there at the bottom of your screen. 1-888-621-2127. Any questions at all? Any concerns? Text that number. We'll answer any questions that you guys have. That's it. Simple as that. Otherwise, go right to ttgoffer.com. Again, everything on that page is included. There's no upsell for any of that stuff. And get your butt in chat. Let's make some damn money together. Let's make some damn money together. Can I use my own platform to trade? Pia, absolutely. Pia, we are not a brokerage firm. Okay, so Pia, if you use E-Trade, if you use Charles Schwab, if you use Webull or Robinhood or whatever, you use that to trade with. We are an educational platform. And we have a chat room and we have educational material and we have tools and resources for you to use. But we are not actually a broker. You don't give us your money and place trades on our platform like you do Robinhood or E-Trade or Webull. Okay, so you use Pia, you use your brokerage account to place your trades, right? So that doesn't change. We are not a brokerage. Okay, I want to make that very clear. Okay, so again, folks, any questions, text us 1-888-621-2127. Anybody have any questions for me? Trading related. Anybody got any questions for me? Any questions about what we talked about? Questions about the jobs numbers, questions about, where we are with the overall markets. I'm in an investment competition now until December 6th. Any advice on what I should invest in? Ooh. So Nicola, one thing that I would look at, and this is something that I'm starting to look at, is with this strike, with the port strike, and with goods and services being routed to ports in the West Coast, take a look at transportation stocks and railroads, because what you might see happen is goods that normally would hit a port on the East Coast and be a quick, 18-wheeler drive to North Carolina or Pennsylvania or Boston or Georgia, right, is now going to be rerouted all the way over to California. And when it gets California, that now has to get its way all the way across the country to Georgia, to Alabama, to South Carolina, to Maryland, Virginia, New Jersey, New York, Connecticut. It's going to have to go all the way across the country now if it gets rerouted to the port on the West Coast. So check out those transportation stocks. Look at stocks that do long haul shipping. Look for air freight. Look at railroads, because they could see an uptick in business coming from the West Coast now, having to transport goods all the way over to the East Coast. Hugh Mars says, TTG is my family. I'm here learning every single day. I lost money in other groups and I learned nothing. Adam and Mike, their team is the best. What was the reason for the closing last 15 minutes rally? Asked Trader One. It's just, I just think that it was, following Jerome Powell's finishing up his press conference, or it wasn't a press conference. It was really just a Q&A. It was a fireside chat at a conference or an economic forum that he was a guest at. I just think that he said some good things going into the end and going into his closing about interest rate cuts and the state of the economy. And the markets liked it. The markets rallied going into the job openings numbers that we got tomorrow. You spoke in chat about trading off the bell the first 15 minutes. Please elaborate again. I had to leave my office. Sure. Hirsch, what's up, brother? Hope you and the family are doing well. What I was talking about in the morning session today was just something that I've seen from a lot of traders. We do one-on-one mentoring and one-on-one coaching with many of our members. And one of the things that I see a lot from people is the opening bell is extremely volatile. You have thousands upon thousands of orders that are all being executed at the same time. They're all coming across the same trade desk. And sometimes that volatility off the open is wild. And sometimes you get these huge green candles, these huge red candles, and traders get very anxious and they jump on those candles right away. And then it often ends up being the wrong move. So you get like this big, I'll show you just an example today. So on our watch list today, and I told you guys about this on the live stream yesterday, was trade ideas that we had was Netflix short 710 to 712 and Amazon short 188 to 189. These are just trade ideas we got coming into today. I talked about it on the live stream yesterday. Well, right off the open, you get these big green candles on Netflix. Now, sometimes the stock just keeps going in that direction. But other times, an inexperienced trader says, wow, look, big green candle. They go long. And then as soon as they go long, the stock reverses and then they get stopped out. How many times has that happened to a lot of people that are on this live stream right now? And the reason why that's happening is because, you get this nice big push off the open, but it's a push off the open that's taking you right into a level of resistance, right? Here's your level of resistance, right? So you guys can see this level of resistance. You push right into it and then bang, the stock just reverses. And a lot of times a trader will step in here a couple minutes off the bell and go, wow, big green candles, they go long, and then they get stopped out, right? So what I was saying to people, and I'll give you another example. Another example was Amazon today. I went over with you guys on the live stream last night about Amazon. We said Amazon, 188 to 189 resistance, right? And what do you see right off the open? Right off the open, bang, big green candles. Now, inexperienced trader might say, wow, big green candles. They go long, and then they get stopped out. And that's because you're getting caught up in the early morning momentum, the early morning volatility of the first couple minutes off the bell, and you're not necessarily seeing the bigger picture, which is, again, a resistance level. So there's your resistance level, resistance. You pop back into it, resistance, and the stock then rolls over. So that's why we talked about on the live stream, and you have to take my word for it. You can go back and watch the live stream from yesterday, but I literally said to you yesterday on the live stream, 2 trade ideas for today. Short Amazon, 188, 189. The high of the day is 188.48, or 188.49. And then we said short Netflix between 710 and 712. The high of the day is literally 711. 711 and 21 cents. And it's not because I just picked those numbers randomly out of thin air. It's because those are the areas of resistance. And what did you get? Netflix gave you a nice tradable pullback that a lot of members made some pretty good money on this morning. And then, Amazon did the same thing, right? Amazon first gave you the pop right into that resistance level. That resistance level held, and then the stock just completely rolled over, right? You see that? Boom. And a lot of members were able to capitalize on that price action. A lot of members were able to capitalize thanks to that analysis, and that's it. All right, so that's kind of what I was talking about is wanting to wanting to be a little bit more patient off the open and not just jump right after the first couple of candles that you see. Just wait a couple minutes. Wait 10, 15 minutes. Let the market settle in. Let that initial volatility calm down. And then you can really start to determine what's the chart pattern that I see, right? Because when there's only 3 candles, when there's only a couple candles off the bell, you don't have a chart pattern, right? There's no pattern there. It's just you're chasing momentum. You're either chasing big green candles or you're chasing big red candles. So my advice would be to wait a couple minutes and wait for your levels to be interacted with rather than a big green candle causes you to go long or a big red candle causes you to go short. So what I was saying to you was go check your trade history. Go check, break your trading up into time frame. See what your P&L is when you enter trades in the first 15 minutes of the day versus when you enter trades, after 10 o'clock. And see if there's a difference in your P&L. See if there's a difference in your win rate. Because if there is, then that's a real telltale sign that you should stop trading the open, because the open, you get spun around. And when you just wait and you wait for patterns to form and you wait for levels to become more clear, you're much better. Your analysis is stronger. So I would then say for you, the market doesn't open at 9:30. For you, the market opens at 9:45. And I would implement that into your trading style and your trading strategy and see if that improves your results and improves your P&L. All right. Any other questions, folks? Yep, our Hirsch, my pleasure. Any other questions? If not, we can wrap things up. Yep, Cody, exactly. The bell can cause FOMO for some traders. Exactly. The bell can cause some FOMO. Yeah, good point, Lucky. Lucky says, if you guys are learning from the live stream, imagine what you guys are going to learn inside of your training group. Exactly. Any thoughts on Tesla if it gets through 270? I don't think there's that much upside. I really don't. Because you get through 270, you got resistance at 280. Then you get through 280, you got resistance at, literally 290. And then after 290, you have 300. After 300, you have 314. So you've got a lot of resistance levels here on Tesla. So I'm not, there's 270. That's a level of resistance. Then there's 280. That's a level of resistance. There's 290. That's also a level of resistance. So just because you take out 270 doesn't mean that, that's it. This thing has clear skies to 300. You've got resistance all along the way here. So, I'm not, I think Tesla has had a huge move off that August 5th bottom. And I think that this stock needs to consolidate or, at least give you a little bit of a pullback to try to recharge that battery before you think about any significant move to the upside. I don't think without a period of consolidation, I don't think the stock is going to have enough momentum to take out all these resistance levels. I think it's more likely if you took out 270 without a period of consolidation, I think it's more likely that breakout fails. And if you were to do this, if the next couple candles on Tesla look like this, right? If that's what the next couple candles look like, I think it's more likely you're going to get something that looks like this. A failed break, a tail, and then a pullback. So I think that you got to be careful the further you get up into that level without a pullback or consolidation first. Now, the flip side of that, if Tesla were to do this, pull back, bounce back up, pull back in, right? Do this, then much more likely that you can push through that level. But the stock needs a moment to actually pause, consolidate, maybe form a bull flag to eventually break out and attempt those levels. So I'm not sold that, hey, take out 270 and it's just blue skies from there. I don't think so. Apart from support and resistance on daily, do you consider any other indicators? Thank you, Rajiv. Of course. So Rajiv, we use the 9 exponential moving average. We use Fibonacci levels. We use VWAP. So there are a lot of different indicators that we do consider. We use the RSI. We use the MACD indicator. So it's not just support and resistance on the daily chart. Nice. Mark McFarland, we got a one-on-one tomorrow. I'm excited, brother. Can't wait to speak with you. Mike, you spoke about MicroStrategy yesterday. How do you see it going this week? Mo, MicroStrategy is at the very top of my list for a swing trade setup. But that's because I'm bullish on Bitcoin. So here's the analysis that I gave you guys for Bitcoin on last night. Bitcoin was in this very big channel, right? So you guys see this channel here on Bitcoin, right? This big channel here that's lasted for months, where you've put in lower highs and lower lows, which means you have a downward sloping channel. Then on August 5th, you have this bottom tail that gets put in. Now that bottom tail is significant because it tested a prior level of resistance, which was that January top. So you see that January top used to be resistance, broke it, pulled back in, now support. But the other thing of significance is that for the first time during this downward sloping channel, you have a higher low. So see how the downward sloping channel puts in a higher low instead of going to a lower low and then bouncing again and continuing the downward channel. So that is an early sign that momentum might be shifting. And then you rally all the way back up to where? The top end of the channel, right? So you run into the top end of the channel and it's resistance, just like the top end of the channel has been resistance, okay, here, has been resistance here all year, right? And the bottom end of the channel, obviously, the bottom end of the channel has been support all year, right? So you run up into that top end resistance. Then I said on the live stream last night, I told you guys on the live stream last night, look for a pullback on Bitcoin into the low 60s. Okay, I said between 61 and 63,000. That's the support level I'm looking for. So what do? We got to pull back today, back to 63K. So let's now look for this pullback to give us another higher low. And if Bitcoin pulls into this level and does something like this, right, and then breaks out to give you then a higher high, because you've been getting lower high, lower high, lower high, lower high, you would then, that breakout would give you your first higher high. So then you have your first higher low, which gets confirmed by your first higher high. And then that is a breakout of the channel. And that would take Bitcoin up to test the all-time high. So early signs of a shift in momentum, but that higher low on Bitcoin needs to result in a higher high. And that gives you a breakout of channel. And then that breakout of the channel, which is a very nice long channel and consolidation that's allowed for the energy to build back up to the upside, that would take Bitcoin to a new all-time high. And that, I think, would take MicroStrategy also to a new all-time high, as MicroStrategy has been consolidating since that March top as well, right? So made a lot of money on MicroStrategy last week. It was trade of the week. Okay, I caught that entire move. I bought the stock on this day and I sold it right there. And it's because of that channel there on Bitcoin. So if you guys were following the YouTube channel, you guys know that I was long the stock last week. I'm no longer in it, but I'm looking for a pullback to reset, get back into a swing trade for eventually a breakout on Bitcoin and eventually a breakout on MicroStrategy. It would be a swing trade. It would take several weeks, I think, for this trade to play out. I don't think this is a trade that happens tomorrow, but I do think it's a trade that we all need to be paying attention to, because if Bitcoin goes, MicroStrategy should follow. So I'm watching Bitcoin very closely. My target would be the 200 all-time high top, but eventually I actually think the 200 breaks and you shoot to like 220 as volatility just picks up and Bitcoin runs, and I think MicroStrategy would run with it. So I'm bullish. We'll see if I'm right. I don't have a position right now. I exited on Friday, took my profit, waiting for a pullback to reload. I'll let you guys know if and when that happens. All right. Nice. Way to go, Christopher. Christopher says that was a monster trade for me. Great job, Chris. Great job, man. Happy to hear it. Well, folks, that wraps it up. That does it for me. Hope you guys enjoyed the live. Hope you guys feel better prepared for tomorrow. Go to ttgoffer.com. Join now for the 500. You've got a double your money back guarantee. So what do you guys have to lose, right? If you can't make the 500 back at least once, we'll give you back $1,000. Go read it. Double your money back guarantee is right there. It's in black and white. Check it out. All right. Have any questions? Text us 1-888-621-2127. Join 10,000 members from 117 different countries. I'll see you guys all in chat tomorrow. Have a wonderful